Hi, everyone. I am Aubrey Ruby. I am a senior fellow at the Africa Center at the Atlantic Council, and I'm so pleased to be joined today by two wonderful operators in African markets, Danielle Montgomery from the Development Finance Corporation and Sanjeev Gupta from the African Finance Corporation. Recently, the DFC announced a $250 million investment in AFC under a Tier 2 capital loan arrangement, and it was finalized earlier this year. Danielle, can you tell us a little bit about the DFC?
Sure. So DFC is actually a relatively new agency. We used to be known as the Overseas Private Investment Corporation, and in January of 2020, we became the Development Finance Corporation. And so as the DFC, we continue the mission that OPIC had, which is to work in emerging markets with the private sector to have positive development impacts on the markets in which we operate.
And African markets have always been a large percentage of the overall portfolio of OPIC and now the DFC. So this is a very interesting development. Why was this investment a priority for the DFC? Why did you move forward with this relationship with AFC?
Well, so we actually have quite a long history with AFC, excuse me. We now all have the same acronyms just about. I was looking back through my papers and realized that 7 years ago today, we approved our very first loan for AFC of $75 million in 2014. So we've known AFC a long time, since they were a brand new DFI themselves, having only been established 6 years prior to our very first loan. It was before they'd been rated yet. I mean, all of these kinds of things. So we looked to partner with them because their mission was very much our mission, and which is helping infrastructure projects and other types of developmentally important projects in Africa. So this worked out quite well for us. And 7 years later, when Sanjeev and I started talking about the potential for Tier 2, it was within the context of the COVID pandemic, obviously. And what we realized is that DFIs play a very important role in helping the economies recover from COVID, especially in the low income and low middle income markets in Africa. AFC is uniquely positioned as an in-country regional development finance institution to be a very effective partner for us to help sort of magnify the impact that we can have as we also look to support projects, companies, and borrowers by supporting AFC, providing them with liquidity, helping them to help their borrowers survive the COVID pandemic. I think we're really very pleased to have made this, this investment with them.
Indeed, Danielle did so much of your job saying a little bit about AFC, but tell us about AFC, where it operates, kind of what priority sectors you invest in, and what makes AFC different.
Yeah, thanks, Aubrey, and obviously thanks, Danielle, for being such a great spokesperson for us. Makes my life easier, obviously. So, Aubrey, a couple of pointers to kind of highlight AFC and why it's kind of unique. It was created, as Danielle said, 13 years back. And the unique aspect of AFC's creation was it was for the first time African governments and African financial institutions who got together and created what is genuinely, even today, a truly Pan-African institution, which is funded or was funded and continues to be funded with African sovereign and African private sector money. So that in itself was a unique experiment. The other thing that made it special was that it decided consciously to embark on playing a role in what was then seen as one of the most complicated sectors, being infrastructure. Because as you know, globally, private sector capital or commercially oriented capital has difficulty creating infrastructure projects that provide them with the right kind of returns. And in Africa, where historically for many other reasons that had even additional problems to deal with, it was a fairly ambitious and a fairly visionary type of mandate that AFC got created on. And the third thing that I think makes AFC special is that it's unlike a lot of other DFIs, in fact, most other DFIs, we are ourselves a public-private sector partnership, okay? And consciously, the founding fathers decided that the private sector would always have a bigger role to play, so that overall, whether you call it the governance or the operating structure or the expectations or how you manage other people's money, all enjoy the benefits of what the sovereigns brought, but also what private sector discipline brings. So that is pretty much us. I mean, just a couple of sort of pointers to indicate what we have achieved so far. Our investment footprint is now across 34 countries in a space of 13 years. We have mobilized close to $9 billion during this period, which actually incidentally, Aubrey, makes us the largest infrastructure financier in Africa. There are obviously other players doing bigger things in Africa, but when you hone in just on infrastructure, there are no bigger players than us. And we've done it at a profitable level, because from day one, we've been profitable. We've never had a loss-making year. I don't want to tempt fate. We pay dividends to our shareholders, which makes it very special. And, Danielle mentioned that when they put money behind us, we were not rated, but today we are rated. We are rated A3, which is the second best credit rating on the continent. So overall, that's our story, Aubrey. Sorry, you gave me the stage and I took it.
No, that just shows that there is a catalytic impact of these type of partnerships. And as Danielle said, there's an important role to play during this COVID period in stimulating the economy and how investment can help spur economic recovery. We at the Africa Center hosted a conference back in October where the DFC talked a lot about investing in Africa's future and recovery. And we brought the AFC and other development finance institutions in Africa together because we think that it's through that partnership of the kind of US capital in addition to African capital and African operational footprint that can really make a difference. So Sanjeev, are you seeing these kind of investments already having an impact on the road to growth again?
Yeah, the simple answer is yes, Aubrey. You know, there is an African proverb that I like quoting, which says that if you want to go fast, you go alone. But if you want to go far, you take partners with you, right? So I think the AFC story is actually sort of representative of that, because right from inception, we have worked very well with global capital that wants to come into Africa, but is seeking the right platforms to come through. We worked with DFIs globally, from Asia, from Europe, now with DFC, which has helped us because DFIs have a certain type of funding structure, a certain risk appetite, a certain time horizon, which is very, very effective, which very often private sector capital battles to provide you with. So during COVID era, I mean, it's no secret that the continent has suffered and continues to suffer from a huge amount of liquidity crisis, foreign exchange shortage, and et cetera, et cetera. So it's institutions like us which will have to play a role, but we can't do it without the cooperation, active cooperation, by the way, from the other global DFI communities. And that's why this joint collaboration, Aubrey, is so significant, because in many ways, you could probably say that for the first time, you're actually seeing African institutions taking the lead, but global institution coming behind that lead to provide the sustenance and the stability that gives us the confidence to make the decisions that we are making.
And Danielle, one of the things that's been a challenge for a long time for attracting investment into sectors like infrastructure and African markets is an overall risk perception among institutional investors and other types of investors in the US. You know, how can DFC kind of change that? Part of your mission is to be catalytic. And all of us who try to mobilize more Western capital to go into African markets, which are rich with opportunity, really look for DFIs and others to kind of signal to the market. Do you see DFC really activating this role?
No, absolutely. I mean, our primary reason for being is to help mitigate risk for our investors and our partners in emerging markets. And without a doubt, under the new administration, the new Biden-Harris administration, the focus will be even greater on low income and low middle income countries, which AFC as a partner in Africa is a perfect instrument for us to help broaden our reach there. We also provide political risk insurance, which is another instrument that can help investors get comfortable with perhaps the tenors that are required to go out in these infrastructure projects and things. So yeah, absolutely. Our mission is to help address risk in these markets and to kind of reduce the decisions down to the commercial decisions that would be the same in Luxembourg or anywhere else versus Ouagadougou, for example. So these are the types of tools that we have. We can provide the debt, we can provide political risk insurance, we can provide a demonstration effect by providing this investment in AFC as a signal of confidence that they are going to be able to deploy our funds and use them for a positive impact in all the countries they operate in. So that is absolutely our hope.
Well, this is all very exciting because we at the Africa Center work a lot to strengthen U.S.-African commercial ties. And here's a perfect example of one. So thanks for joining me today for this brief explainer. And we're so interested in watching this relationship mature and grow in the future. Thank you both for joining.
Thank you so much.
Thank you.